I heard the recording in progress.
Yeah. Good afternoon, everybody. You love that. Tom Butcher with the Mortgage Collaborative. Want to welcome you into our latest TMC Connect session, which is part two-part series. It's our TMC Credit and Verification Cost Saving Series. And just about to get started here. We're going to give it just a moment for our audience to filter in for today's discussion. Just a reminder, as always, if you have any questions or comments throughout, you can feel free to drop those either in the chat function or the Q&A box, both of which are accessible at the
Did we lose Tom?
Something happened. So drop a question.
Yeah.
Q&A. We're ready for it.
We're ready. Let's go.
Tom, we lost you for a minute there, bud.
You've been resuscitated. Welcome
Hey,
back.
now you're on
I
mute.
see that.
You know, I
Can you hear me
prefer
now?
things to start this way because it really just gets you ready for anything that can possibly happen. It kind of smooths out some tension. So, Tom, thank you. It's not my dog barking or anything like that. So, well, this is either going to go one of two ways.
Right.
I'll finish the introduction for Tom to say that you are on mute. You've come in on mute, so please feel free to drop your questions in the chat or the Q&A, and we will address those as we go. We want this to be interactive, so please use the chat and not just for asking where Tom is. Thank you all so much for being here, and Tom is back.
Well, thank you, Tony. It's good to know that I can make the call to the righty in the pen if my internet goes unstable again. But Tracy, to your point, it's always fun to start off this way. It keeps it real.
Yes.
Well, hopefully I won't lose you guys this time, and we'll go ahead and jump right in. So, as I mentioned kind of partially before I got cut off, this is part two of our credit verification cost saving series. And we feel, really privileged to bring you this content because, as I mentioned in our last webinar, I can't recall a time where you had three competing credit verification providers willing to come together, impart their knowledge, which each spans decades within our industry. I won't specify how many, but really here to be, subject matter experts for your benefit, the lending community of the Mortgage Collaborative, and kind of impart their insights on how you can more effectively not only manage your credit and verification monthly bills, but also in an effort to improve efficiencies and help reduce your costs, or globally, the cost to originate a loan. So on that note, before I get cut off again, I want to welcome in, first off, Chief Operating Officer, Partners Credit, Tracy King, and Strategic Account Executive from Certified Credit, Jeff Woltemath.
Thanks,
And
Tom.
Chief Data Officer from Zactus, Michael Crockett. I appreciate
afternoon.
each of the three of you joining back in for part two with me today, and looking forward to a fun conversation. So I guess real quick before we jump in, I've got some questions for you each, but just a brief synopsis for the audience. Part one, and I'll drop the link for it in the chat as well so you could view it on demand if you didn't catch part one. But we spent a lot of time kind of talking about analyzing your monthly work number bill and also reviewing your internal processes, some of which included maybe the controls on who within your organization can order from the work number, ordering direct through your credit and verification partner as opposed to doing it direct with the work number to avoid unnecessary verification orders, and even timing as to when you order your verification services can go a long way to help you reduce your monthly costs. So for today's discussion, we're going to spend more time kind of diving into the vetting process and considerations that lenders should be making out there when you're analyzing your current monthly spends, and really what you should be coming to expect from your providers. So on that note, I want to jump right in. It's going to be a question for the entire crew to kind of kick us off, but every vendor and lender alike are consumed with prices right now, which is completely understandable in the current down market, but price shouldn't be the only piece of the pie that you're considering when you're looking at your providers, whether it's in credit verification or any third-party service in your origination process. So my question to the group to kick us off is, give us each one example for the audience that every lender should ask their credit verification provider in particular in the due diligence process that you believe maybe is too often overlooked.
Sure, I'll take the first stab at it here. And I'm going to present it more from a data perspective. I would say if I'm a lender, I certainly would want to know from what data, what analytic solutions are available to help you make decisions earlier in the process. And that does, again, kind of play on to the part of the earlier you can make decisions, the more efficient you may be able to be. I think about it from another mindset of what Fannie and Freddie are doing today with the early assessment, the LPA. They're trying to give information earlier so that you don't have to spend that additional fees later into the process unnecessarily. So, you want to look at your internal workflows. You want to look at the consumer experience, what's going on, making sure that you can level set those expectations. And then obviously, I think internal, as you have the underwriters and your underwriting that's being done, that will give you information to more efficiently underwrite those files.
Yeah, I would kind of echo that. I would ask Tom, the first thing I would ask that when working with a vendor, what are some of the ways that you can really ensure that you're getting somebody that is willing to truly work with you? We talk about being able to customize product. We always talk about customizing solutions with our clients. How can we make sure that we don't make your workflow work with our product, but rather we want to make sure that our products work within your workflows? We often say that no two borrowers are alike, and neither are our customers. It's important to feel confident with your vendors, their products and services, to really find that maximum efficiencies and find the right path for your organization. So, between the three of us, we all have hundreds of flexible options. And we're really committed to not necessarily squeezing you into a box that doesn't fit. So a great example of this is, the flexibility of your vendor flow within like VOE orders, for example. These can be changed to meet your needs. If you're more interested in initial cost savings, maybe you put the Experian Verified product first, then possibly a consumer permission option next. And maybe you have, or maybe you just want, the work number as option one. Maybe you only want the three of us to facilitate a manual VOE for you. So, all of us are really here to really make sure that, that we assist you and not just sell you an out of the box solution. So ultimately be a true partner and not, quote unquote, a vendor to assist you.
Yeah, and I'll just kind of bring it full circle with the data and the process of what they're saying is there's also, you should be working with someone that can find and look for and look at the data that you're providing and see where there can be some fixes for you, or there might be overusage of some product. That's something that should be evaluated between you and your credit reporting agency, not necessarily by you trying to go through your invoices on a monthly basis. What can be provided to you to show, how many tax returns are you ordering for all of your credit reports or VOEs, and to what Jeff is saying, when are you doing it, to what Michael's saying, looking at your process, what can you determine early on, and what are you ordering in excess that you don't need to. Right now, it's time to kind of really sharpen down and look at, your process flow and understanding why you pull reports when you do, and looking at that and making sure you fully understand it rather than, oh, our bill is high. There's an understanding and knowledge that can go along with that.
perfectly brought full circle, Tracy, and I appreciate that. Now you guys didn't think we would just, one open-ended question and call it a day here. So we wanted to drill into some specifics that we identified from a prep discussion leading up to today. And just a quick reminder, any questions, comments for the audience, feel free to drop those in the chat. But Michael, I'll kind of start and let you to elongate on the first one that we kind of honed in on, which was, you need to have a really particular focus on how long has your current provider or the provider that you're vetting been in business, especially if it's somebody relatively new out there. So Michael, you kind of want to add a little bit onto, the stability and experience and why that's a huge benefit.
Yeah, one of the things that is an advantage, but sometimes people don't necessarily recognize it, is understanding the process, the evolution of what's going on in the mortgage industry. We are now in a new era, but for those of us who have been doing this for a period of time, a new era is also a new opportunity for us. When you start looking at your vendor, you want to have someone that has proven stability, right? One of the things I think you mentioned, Tom, a new company. So Zactus is a new name. We formed Zactus in 2022, but it was a combination of 7 companies that were combined. So when you start talking about the number of years of experience that Zactus brings, you have combining Credit Plus, Advantus, CIS, DataFax, Sharper Lending, Universal Credit, and then we just purchased a flood company with Massive Cert. I give you that piece of information, and every one of us, I think we should all touch on the longevity of our companies here, because again, we're not competing against each other on this panel. We are simply trying to make sure that we bring to you, the lenders, our partners, some of the things that you really want to consider. Coming into this and just simply thinking that this is a supplement world, that if you can provide a credit report and that you can provide back a supplement, and that's all that it consists of, you're surely getting with partners that are not going to be able to help you during the storm. There are so many things that come up in the midst of a process, the origination of the loan, that you're wanting to have companies that do have several products and solutions within that mortgage life cycle, right? And that's what we all bring to the table. So I don't want to make this a Zactus, a partners, or a certified who has what, but I do want you to definitely understand and appreciate that we do have, literally over 75 years of experience in being in business. And I'll let Jeff or Tracy, certainly, you guys speak on that as well.
Yeah, I think what's important to note, and just piggybacking off of that again, is just, if you look at our industry, and you may or may not know a lot about it, but there used to be a couple hundred credit reporting agencies, and that number has significantly dropped down. I don't know what it's at now, maybe 20 to 30.
Or less
but
than,
yeah. And that's not just because of acquisition, that is because of good business and understanding the industry and who can survive through different cycles. And I think that all of our companies has proven how to do that, and to be flexible, to be nimble, and to adapt. And, I'm sure a lot of us are working with community banks that have been able to maintain independent mortgage bankers where, through different cycles, those are the ones that kind of come through. And I think we've been all able to do that collectively as well.
Yeah, I'll just add that, Michael, thanks for throwing it out to us as well. 40 years in business, nearly 40 years. Certifieds have been around, and to Tracy's point, yeah, there aren't many of us left. So, and I love being, part of this group where we are kind of best in class and part of the TMC network. So.
Jeff, I appreciate that. To take that a step further, because you had mentioned in kind of our prep, just, a real focus on organizational culture and value, and how that could potentially align with your lending company. And that is near and dear to us within the TMC family, if you will, here too. But I'd love additional thoughts from your perspective on that.
Yeah, I appreciate that. Yeah, it's always nice, right, when culture and values align. whenever we look to partner with a new lender. As an example, we look at things like, are they addressing underserved markets or kind of next gen markets? How do they help reach these areas? Are they creating unique products that address the needs of these borrowers? From our perspective, we're focusing a lot on next gen and underserved markets from an educational perspective, focusing on building resources that help those audiences really better understand credit, the mortgage loan process in general. In addition to that, really help them be set up for success. Currently we're working with other vendors and others in the industry to really come up with ways, to build solutions to meet the unique needs. So yeah, on the underserved market, one of the biggest things to overcome is obviously credit, which is what we're here for. On the next gen side of things, it's, really dispelling rumors and providing a reliable source of information, instant supplements, consumer permission products, kind of looking to meet the borrowers where they're currently at. And overall just creating a better borrower and lender experience. So yeah, to your point, culture and values are huge for us when we're working with any prospective lenders.
Yeah, it makes a great point too, because each of you is in a unique position to essentially serve as an extension of your client, in those services through the port of originating a loan. So it is important that the culture and the values align, with your client companies as well. Another question we brought up here, which that was really important, is, do you have trusted peers that you can consult with as references for the provider that you're currently vetting? In my experience in the collaborative, having a lot of opportunity to vet different third parties out there in the industry, if I got a set of references that any one of them was less than stellar as far as the conversation I had about the third party I was vetting, it's a huge red flag. And, a vendor providing you references for clients to talk to about their experience, these should be the biggest champions of the solution offering. Obviously, there may be nuances, and they're going to provide candid feedback, you'd hope, but you'd want overall that to be a ringing endorsement. And Jeff, I'll bring it back to you. You brought up a good point here, which is, asking about like how your vendor is addressing that customer feedback. And I'll open it back up to you if there's anything you want to expand upon that further.
Oh, I appreciate that. And sorry to hog it here early. This is unusual for me, but yeah, feedback, feedback is crucial. Customer feedback is of utmost importance, and I think really a great question to ask around this is, how willing is your current provider to adopt new strategies, new technologies, new tools to really help you improve efficiencies, to help make your life easier, your borrower's journey easier? As I'm sure Michael and Tracy do as well, we have an in-house dev team that's constantly listening, to our customers' feedback, providing regular updates to our programs to really make sure that they're getting the most efficient solution. With the adoption of technology, you're seeking out these new unique solutions that might not have been there before. Like I mentioned it before, an instant supplement. So ultimately, we're just trying to make, constantly trying to make the experience better for our customers. So listening and taking action on our customers' feedback is, like I said, is very important. So.
Oh, great points out there. And let's, actually, we'll question from good friend, new TMC board member Paul Campbell out there in the audience. Want to know, do you secret shop your own companies? And if so, how often? And what's a sample question or two if you go that far?
Well, that's an interesting question, Paul. Hard hitting, as always. I'll say this: if someone's unhappy, you're going to know in our industry, and we try to stay ahead of that as much as possible. We do know if you're talking about kind of comparing ourselves for others via pricing, no, we don't do that. I think that, you know, our products should kind of stand on their own. And, but what we do, you know, there's two sides of it. There's kind of, if you're thinking about pricing structure, processing, all of that. And then there's the internal processes that we all deal with as well. For what Jeff's talking with, when you're ordering supplements, when you're trying to improve the borrower score, when you're trying to work with a representative and get a hold of your credit reporting agency, whether it's, you know, can you help me read this credit report, or I can't log into your website, I forgot my password. What we do for our customers is maintain analytics on all of our data in terms of how quickly our customers receiving that. So something that I would tell all TMC members to also think about is when you're talking to different credit reporting agencies, is talk about service level agreements. I know that's something that all of us offer. You should be able to ask them, you know, what's your average time to answer the phone or answer a live chat, or your turn times on supplements or the IRS. So Paul, tricky question. No, we don't shop for others and see what their pricing is. It's kind of, you see that all the time, but I think more importantly is checking on your service levels and having people have that information readily available to you and knowing what that looks like.
Yeah, I'm going to take it from a different angle. So that secret shopper question is, if you're meaning, do we call in and see what the client experience is in
No.
dealing with our company? Then we do. We employ an outside marketing firm that we consult with as well. And one of the things that actually came out of that for us from a Zactus perspective was looking at our phone tree. We have a vast number of product offerings that we wanted to make sure that the customer, our customer, can truly get to the right department more efficiently, right? So we didn't want to be, you know, transferred around. What does that experience look like? Are there warm transfers, or is someone literally having to understand our way of thinking in order to do business with us? And in receiving that feedback, we did revamp and launched a new phone system for us. The other piece of this that I still say when we do that secret shopping is, who are your subject matter experts? I mean, who do you go to when someone says, I have a question about your quality control or your lead generation aspect or your VOEs, your employment verifications, and making sure that we do have someone available that is resident within our corporation, that's their job, is to be that subject matter expert, whether that means dealing with that third-party vendor that we often have to deal with, but also making sure that we are up to speed in every compliance regulatory concern that may be going on. So, and the only way that you can do it is, honestly, you have to self-evaluate, and that's how we are getting there.
I'll add, Paul, the one that I get that we see a lot, and I don't know if they're secret shops or not, but they sure seem like it when all they'll give you is, I want pricing for this product, this product, this product. You try to call them, you try to get some additional info. Just know if any three of us are gonna do a price quote for you, we need, you know, a little more specifics than just what's your cost for me that's pulling, you know, 200 reports a month. So that's a very common one. I can't tell you for sure that they're secret shop, but they sure seem.
No, actually, Jeff, I can confirm they're not. From what I've been told, that's Crockett calling into your clients with us direct pricing.
Hey.
Secret,
That falls
right?
under the
Hey.
cheap
No, all
data.
kidding aside here, Brent.
Data is king, man. Data is king.
But I kind of want to go back on that a little bit and take it a step further from the prior question, just around kind of consulting in that whole process. Mike, I want to take it with you here. You know, another thing we talked about as well is, you know, does the sales rep you're working with fully understand the industry? You guys kind of talked a little bit about that in just the secret shopping component. but do they also have the experience and expertise to help set your company up for success beyond just a focus of closing the sale? So maybe Michael, if you want to take a minute just to kind of expand, your experience or how you guys try to approach that from a Zactus perspective.
Yeah. Number one, I'm going to take the lead off of Tracy, even from the first part. If someone is just simply coming in and asking you for your invoice, and that's how they're trying to sell, is they're going to come in and we can save you a quarter here, and then let us make it up on the back end. That is not the consultative approach that we believe in on Zactus. And I think on the panel, as we kind of discussed, that's not our approach, right? We really want to make sure that you leverage the expertise of someone understanding the business. And to that same point, I kind of mentioned it. If there are areas that you want to know more about, maybe it's HELOCs, maybe it's on the lead gen, maybe it's on the QC, you want to have that ability that someone can speak to you other than just numbers, dollars, right? Yes, in a sales perspective, dollars do need to make sense, and that has to be considered. Yet, just simply pushing product without understanding the end goal and the solution is not a favorable experience that's sustainable. We all look, and we want to make sure that we are servicing our partners here. Our commitment when we started with TMC, literally from day one, was to make sure that we would provide suitable products and services that would assist to advance all the members here. And in doing so, we had to also make sure that we provide sales reps, and we do our due diligence there. We have a lot of reps that are out on the street with their ears to the ground, hearing what's going on. But primarily, we want to hear what the need is from our client versus you hearing from us what our products are that we can push to you.
Yeah. And just to, I know a lot of what we're talking about, last time we were talking about kind of tangible actions you can take, and this is more kind of broad. What should you be looking at when you're talking to your company? But I think it's both equally important. And if someone can just come back to you and quote a price versus being an actual subject matter expert for you, I'm sure all of us have products that don't fit every customer of ours. And if someone's just coming in and say, yeah, I've got this, 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 and this, in actuality, and Michael said this great, it's the consultative process of tell me about your business, what works here and what can you eliminate. We're not trying to add on everything so that you're ordering things that you don't need. What you really want is someone listening to how you're doing things, get rid of the excess, and how can we make this solution right for you? So.
Yeah, I mean, Jeff, you kind of hit on it as well, even earlier, just in really thinking about how you're addressing lenders' need for solutions that fit their process, their workflow and their process flow. And be interested if you got anything you'd like to add on there, kind of how you guys take that approach from a certified perspective.
Yeah. Thanks, Tom. Understanding, your customer's workflow is critical, definitely important. So around that, I would say that, we're regularly revisiting the products that we currently have in our portfolio, modifying them as necessary, making updates to them to really fit the needs of our lenders and their borrowers. Whenever we're talking about creating this idea of one workflow, where, we're looking at creating a streamlined, efficient process, we really take the time to listen to the challenges that they're facing and then take that feedback back to our dev team, like I mentioned before. And that's when we can really take a look at our products like the Cascade DOE or credit reporting processes, and then decide if this is an update that can happen to an existing product, or is this really an opportunity for us to create something custom or unique specifically for that lender or maybe even the industry as a whole. So
that's a great point. And I think the last big one I want to hit on here today, and to Tracy's point, a lot of these questions or suggestions of what you should be asking are very tangible. I think this one's a bit more specific. We talked about, focusing on with your current provider, are you receiving check-in calls, on a regular basis, or general usage reports? And, if you're not, obviously it's something that you need to be considering. And maybe Tracy, if you want to kind of revisit that just a little bit, as I know it's something that all three of you make your teams as well as kind of a core practice with your clients. But I imagine it's also something to be leveraging in kind of the vetting process too, is, what kind of data and access reports are you going to see, and then what's that touch point going to look like?
Yeah, and we've been doing a lot of this last year, especially as everyone is feeling the heat from this market. But part of what we do are check-ins, like you said, and we're looking at the different products that our customers are utilizing with us and making sure it aligns with what their process is. So part of that could be, if you're ordering a credit report, how many LQI pre-close credit reports are you pulling? How often are you pulling them? Are you utilizing that versus a debt activity monitoring? Again, a lot of times our customers didn't realize how often their LOs were pulling credit on a file. What's your average per borrower credit pull? Making sure, a lot of times from that data can come a cost saving or an opportunity to give some education to your LOs or processors or underwriters. And I'm sure as the chief data man over there, and I'm sure Jeff is as well, I truly believe, a lot of this is relationship, a lot of this is data, and someone that knows how to interpret it and look at it and understand it. And I like to, a lot of times that will tell the story that you need to help your customer. And if you're not looking at that consistently, and again, putting the onus on your vendor manager to go through invoices and try to analyze all of that, it needs to be digestible. You should be able to have that right in front of your face rather than having to do something that's extremely time consuming. With that, things get missed because no one ever has the time to go through it the way it needs to be done. Your credit reporting agency should be able to do that in a way that's easily digestible, visual, and go through to look at, where we have these inefficiencies and how can you eliminate them.
Yeah, and Tom, maybe just to add a quick bit, I had to write my thought down because I didn't want to forget. But your first point where you talk about companies, the longevity of the companies being in business, to Tracy's point, it kind of resonated with me, is that you, as a lender, you should want to have the historical data available to you so that someone can consult with you. If you are just coming into business, there's no way that you can give the trending analysis because you don't have the history, right? And the history and the longevity of what someone has seen, the ebbs and flows of this industry, is really important. I think also when you look at from the optics of the key performance indicators, where you want to be able to show the efficiencies and the profitability where that can be improved in those areas. I mean, you have to look at things such as the system uptime. You want to know the response time. Obviously, that being from if it's a rapid restore, or even from if the bureau's response time, if things are going awry with certain bureau situations. And then certainly, as mentioned before, the industry trends are really important. And those are the pieces of information that you want to consider when making your decisions. Those are the pieces of information, the pieces of data that you want to analyze so that you can make better decisions that you, again, can become more profitable, more efficient.
No, you're spot on. And it should be highly relevant to lenders as well right now, if you liken that to originators. How many originators on a team right now have only been around for the last 7 or 8 years where the phone's been ringing off the hook with rates in the 3s? Your more experienced originators who have been through cycles where they've had to pound pavement for leads, leverage centers of influence, are well more positioned to succeed in an environment like this. And it is no different with your service providers and their experience of being through different cycles and watching this industry evolve and being, in the know on where it's heading as well. Yeah, I mean, I think on that note, really core takeaways for our audience today is, if you're not already, these are the questions and the conversations that you need to be having, whether it's with a prospective provider or with your current provider. And if that provider's sole focus is your price, then you're on the wrong track. Because whether it's your current or your prospective provider, that focus needs to be not only supporting your best practices, but also process improvement, change management solutions. They're going to make you operate more efficiently, and in turn should make you operate more profitably. So I know I can say we're lucky to have 3 truly best in class providers here at TMC who are eager to hop on the phone and consult with you about that process and be that resource, whether it ends up being a client of theirs or not, but the opportunity to show value to you is a benefit of the TMC membership. So if you haven't consulted one of these 3, I guess my question to you would be, why not?
Oh, well done there.
Yeah, we appreciate it.
Yeah, thank you very much.
So on that note, no questions in the chat. Tracy, Michael, Jeff, I want to thank each of you just for your insights, your expertise. And yeah, members on the line, give them a holler. I'm pretty sure there's something they can be helping you out with in your core business right now.
Great. Thank you so much for this opportunity.
Yep,
Thanks,
thanks a
Tom.
lot.
Thank
Looking
you,
forward to
guys.
seeing everyone in Nashville.
Yes.
Yeah.
It's in counting. Bye, guys.
Bye-bye.
Yeah.